Bryan Gaiser is an investment advisor representative of Advisory Alpha LLC, an SEC-registered investment advisor. All opinions expressed by Bryan Gaiser are solely his own opinions and do not reflect the opinions of Advisory Alpha. This recording is for informational purposes only and should not be relied upon for investment decisions. Investment advisory and financial planning services offered through Advisory Alpha LLC, a registered investment advisor. Insurance, coaching, and educational services offered through Gaiser Financial Group. Gaiser Financial Group is a separate and unaffiliated entity of Advisory Alpha LLC. While tax and legal services may be discussed in the general course of financial and investment planning, Advisory Alpha does not provide tax or legal services. Please consult with your tax or legal professional prior to making decisions related to these issues. This material is not endorsed or approved by the Social Security Office or any other government agency. An annuity is a long-term financial product designed largely for asset accumulation and retirement needs. All guarantees are backed by the claims-paying ability of the issuing insurance company. All opinions expressed by externally cited sources are solely their own opinions and do not reflect the opinions of Advisory Alpha. This is for informational purposes only and should not be relied upon for investment decisions. The case studies presented reflects the specific circumstances of one client and should not be considered a guarantee that another client or potential client may experience the same or certain level of results. This is for informational purposes only and should not be construed as investment recommendations or solicitation. Names have been changed to protect the anonymity of clients and are not testimonials in nature. Learn, grow, and take charge of your retirement. This is the Wealth Through Wisdom podcast with financial advisor Bryan Gaiser, founder of Gaiser Financial Group.
So many Americans continue to see the national deficit going up and up. They wonder what they can do to try to protect their savings from future tax hikes. The conversation around Roths is a big area that a lot of people want to know more about. Roth IRAs in particular is what I want to ask you about right now, Bryan, because Roth IRAs, they have limits. So at age 50 and older, you're only allowed to contribute up to $8,600. That includes your catch-up contributions. Also, for higher income earners, if you make too much money, for folks that are single, if you make over $168,000 of income a year, or if you're married filing jointly over $252,000 per year, then you're shut out from Roth IRAs entirely. However, not all is lost. Wealth planner Tim Steffen was on Morningstar talking about how there is another option called the Backdoor Roth. This is Tim Steffen.
If you're not able to contribute because your income's too high and you don't have any IRA dollars to convert, the backdoor is a way to do that. So you put money into the traditional IRA and then wait some period of time, sometimes a day, sometimes longer, depending on what people want to do. And then you convert that to a Roth IRA. So backdoor Roth isn't really a thing. It's really just a traditional contribution followed by a conversion, which anybody can do that. That's a perfectly legitimate strategy.
But it comes with its own intricacies,
Gotcha.
Shall we say. It sounds like it should be a straightforward thing, but as with many things, things can go wrong. So what are some flags that you would like to raise for folks in regards to trying a backdoor Roth?
It's funny you say that. There was a couple that came in here and they had an issue and they're saying, hey, look, we've been doing backdoor Roths for a few years now. And all of a sudden we got a tax bill we don't understand.
Okay.
And I said, well, and they kind of gave me what they did. And they said, well, we put $8,600 into the IRA and then we immediately converted it to a Roth. I said, well, that's good. There's a problem though. Do you have other IRA money? Of course we do, blah, blah, blah. They tell me the numbers. I say, well, what they do is they look at all of your IRA money, not Roth IRA, but just traditional IRA money. Mm-hmm. And proportionately, you can do that backdoor Roth relative to the total. So what that basically means, and it's a little difficult to understand, especially explaining it over the radio.
Right.
But the bottom line is if you have other IRA money, you can only have a percentage of that is tax deductible, right? In other words, you don't have to pay taxes on. Even though you've paid taxes on that money, you just stuck in to the IRA.
Yeah.
They look at your whole IRA and you're converting that piece. Now, because you put those funds in there this year, mm-hmm. that counts against you. And they're, in a sense, you're almost getting double taxation. And so the Roth conversion, did you hear what this gentleman just said? He says, if you have no other IRA money and your money's all in a 401k traditional, say, if you have traditional and it's in 401k, well, the traditional 401k doesn't count against you. Okay. So let's say I have no IRA money.
Yeah.
Traditional. And I want to do a backdoor Roth. So I stick $8,600 into an IRA and I convert it. Mm-hmm. Well, since I have no other IRA money, 100% of that I don't get taxed on because I've already been taxed on the money I stuck in the IRA. Then I converted it. But if I have $100,000 in IRA, now that it gets lumped in there and it pro rata. If you ever heard of that, pro rata means part of it is now taxable, even though I just stuck it in there, already taxed and took it back out. You get what I mean? So it's a little confusing, but the bottom line is if you have all 401k, so if you can roll your IRA into your 401k and taking it out of the IRA position, right? Then you can do those kind of things. But if you notice that gentleman said, if you have no other IRA money, you can do these backdoor Roth IRAs. That's because you make too much money. So if you're single, that's $168,000. If you're married, filing jointly, that's $252,000 collectively. If y'all make that much money, then you cannot contribute to a Roth IRA. A lot of people try the back door, but if they have a whole lot of other after-tax money in there in IRAs, chances are you're going to get double taxed in a sense. That's what I call it.
Is that, for example, somebody who has changed jobs over the years and they had a 401k at their old company and they rolled that 401k out into an IRA, their own IRA
Correct.
accounts? That would be an example of a circumstance like this. If you're thinking about doing backdoor Roths, be careful.
Right. Well, here's the other thing you want to ask your company if you're still working, especially, is that, and you're making that kind of money and you're still working, do they have a Roth 401k?
Right.
Contribute to that. Then you can roll that Roth 401k money out and into your own personal IRA, Roth IRA, and then manage it yourself instead of having limited choices.
It's still...
So in other words, they get you to jump through hoops.
It's
That's
a
what
lot.
we're saying
I
here.
mean, I'm just thinking about there's so many smart men and women who've done a lot of successful DIY investing and saving over the years. But this is a perfect example of where if you are thinking about this strategy before you start making moves, perhaps now is a time to sit down with Bryan, get a second opinion, and ensure you're not going to do something like you were just pointing out. You get taxed twice. So how can people reach you, Bryan?
Here's our number, 336-586-5861. Once again, that's 336-586-5861. I'll kind of look at your situations, see if you are eligible to do a Roth conversion without any gotchas. But I'll also have you, because I'm not officially a CPA or a tax person. I do know a lot about taxes. I want you to confirm it with them.
Right.
You just don't want to get bit. This couple had 4 years of doing those conversions, and all of a sudden they got a tax bill because they looked at it as the whole thing wasn't taxable.
Okay.
So you can get bit pretty quickly, and 4 years is a long time for the IRS to wait. But folks, once again, our number, 336-586-5861. This is a big part of you retiring, that, you know, getting that tax man under control so that you can have a livable tax rate instead of a tax rate that's just chewing you up and eating you up every year. Roths are still a great thing. Just these backdoor Roths, you got to be careful.
Well, if you've got questions about how a backdoor Roth may or may not work for your plan, let's begin that conversation. Again, the number to dial is 336-586-5861. 336-586-5861. You can also go to the website, gaiserfinancial.com, GAISER financial.com. So many people have so many questions about Roths in general, not just backdoor Roths, but Roth opportunities. What are the other strategies that we might be able to utilize? What are there other gotcha moments perhaps that you want people to know about?
Well, I don't know if it's even gotcha moments. The gotcha moments at because you didn't do something sometimes as well.
Okay.
Oh, for the last 3 years, I could have been I don't know why I've been putting that money into my traditional 401k. Now let me put it into my Roth 401k. Think about, should I continue to put into traditional 401k and get that tax break now? Or would it be better for me in the long run to really build up a Roth? Everything's paid for. Yeah, I owe a little more in taxes if I put that money into the Roth. My company won't match it. Well, get the match first. Say your company matches 5% of your salary and it's $100,000. Put $5,000 into the traditional if they're going to stick 5 more in there. But then you still have over $23,000 that you could put into your Roth 401k portion if they have that available to you, right?
Okay.
And then something you really want to do is look out and say, hey, are we allowed to do in-service transfers? Because you can stick it right in that Roth and transfer it into your own account. Use self-management. I'm a big fan of the risk money is the Roth money, you know, your higher level of risk. Because when do you have to take an RMD off of a Roth IRA? Never. Right?
Okay.
The only RMD is if it's an inherited Roth IRA.
Okay.
Someone passed away and that RMD is 10 years after that person passed away, 10 years from the following January. So, which means you can grow that money. So here's our number. Give us a call. There's a lot of things a lot of advisors don't think about or care about. I care about it because I think if it affects you, then I should care about it. That number is 336-586-5861. 336-5861. Once again, 336-586-5861. Really important you get your ducks in a row. Really important you understand what your taxes will look like in retirement. That's what we do for you in that first appointment. Here's the big picture. Here's your Social Securities. Here's your pensions. Here's the withdrawals off your money, drawing down that savings. Let's look at it. How do we sustain that savings? How do we grow it in retirement? How do we put the right money in your pocket at the lowest possible tax? If that's something you want to do, once again, our number, 336-586-5861. Give us a call. Love to sit down with you.
Thanks for listening to the Wealth Through Wisdom podcast. To learn more, visit geiserfinancial.com. Bryan Gaiser is an investment advisor representative of Advisory Alpha LLC, an SEC-registered investment advisor. All opinions expressed by Bryan Gaiser are solely his own opinions and do not reflect the opinions of Advisory Alpha. This recording is for informational purposes only and should not be relied upon for investment decisions. Investment advisory and financial planning services offered through Advisory Alpha LLC, a registered investment advisor. Insurance, coaching, and educational services offered through Gaiser Financial Group. Gaiser Financial Group is a separate and unaffiliated entity of Advisory Alpha LLC. While tax and legal services may be discussed in the general course of financial and investment planning, Advisory Alpha does not provide tax or legal services. Please consult with your tax or legal professional prior to making decisions related to these issues. This material is not endorsed or approved by the Social Security Office or any other government agency. An annuity is a long-term financial product designed largely for asset accumulation and retirement needs. All guarantees are backed by the claims-paying ability of the issuing insurance company. All opinions expressed by externally cited sources are solely their own opinions and do not reflect the opinions of Advisory Alpha. This is for informational purposes only and should not be relied upon for investment decisions. The case studies presented reflects the specific circumstances of one client and should not be considered a guarantee that another client or potential client may experience the same or certain level of results. This is for informational purposes only and should not be construed as investment recommendations or solicitation. Names have been changed to protect the anonymity of clients and are not testimonials in nature.